Okay, so we have been receiving a lot of queries to get answered, and the first one is the difference between enterprise risk management and financial risk management, ERM and FRM. So before we do that, let me explain you what conventional FRM used to be. Okay, but what conventional or traditional, let's say traditional financial risk management used to be. So risk management used to be there, but it was in silos. So there was a credit manager who is managing credit risk in its own department. There was an insurance manager who was managing insurance risk in his particular department, and there didn't used to be a single person, a single department who used to liaison between all these departments. And this is what we used to refer as traditional risk management. When Basel II came, the risk management regulation, it brought up the concept of CRO, Chief Risk Officer. So he was the person who was in charge of all sort of risks that the company is facing. Okay, so now you have one person, things are not done in silos. You have one department dealing with all sort of risk, interacting with all sort of departments. He is in charge of insurance risk, he is in charge of market risk, he is in charge of any other risk that is being faced by the organization. Okay, so this is what we refer as modern day financial risk management, and this is pretty much what enterprise risk management or ERM is all about. So people still differentiate between modern day FRM and ERM. For me, it's almost the same thing, because whenever you have a CRO, whenever you have a central person who is responsible for all the consolidation, for all the for an ownership of all sort of risk, that is where the essence of ERM lies. In today's world, especially in our Pakistani market, ERM is something that is more linked towards insurance, towards non-financial sector, and it comes under the umbrella of ERM framework or COSO framework basically. In the FRM sector, in the financial sector, it is largely regulated by the Basel II and Basel II frameworks, Basel II and Basel III frameworks basically. So financial sector has ERM or COSO also, but it is usually dealt by an internal control unit in the finance department. Okay, so FRM is again it largely deals with the financial related. And yes, one more difference is enterprise risk management is more holistic. Okay, so you, for example, you cover project risk management under it, you cover compliance risk management under it, you cover operational risk. Operational planning is common for financial risk management also, but you cover these sort of things. So more qualitative risks are also covered under the enterprise risk management. Financial risk management is mostly about the financial risk, your credit risk, your market risk, your operation risk, your reputational risk, that risk where you will face some sort of financial losses. Okay, so so this is what FRM is, this is what ERM is, and this is the difference between the two. For me, it is one way or another. FRM and ERM is probably the common thing now. From essence, consider it as holistic, consider it as centrally managed, but it has some differences between the two that is still prevalent in the market. Hope you are able to understand. If you have any query, just please write in the comment and I'll be glad to answer it. Thank you.